Hi, Jonathan York, Bay Financial Partners, looking at investment markets. US equities have started the second quarter here a little bit on the nervous side, and potentially a little bit of profit taking out there after a pretty decent first quarter. Now, certainly the data coming out of the US economy is still pretty strong. You're seeing pretty reasonable durable goods, and GDP for the second half of 2023 actually rose at 4%. So that's hardly a sluggish economy, and all the talk about the US in the recession in sort of 2023 really has been way wide of the mark. Now, while inflation is falling in the US, latest personal consumption expenditure was a plus 0.3 versus plus 0.4 for the previous month. It's probably not coming down maybe as quickly as the Fed would like. But given you've still got a pretty robust economy, potentially the US doesn't need rate cuts at present. But obviously that's what's been buoying the market really since last November, when the Fed sort of did a pretty major pivot and was looking at sort of cutting interest rates. Fed officials are still talking about sort of 2 to 3 cuts this year. Next meeting in May, that's sort of off the cards in terms of a rate cut. Potentially we're looking at second half of 2024. Now, big jump in US interest rates. 10-year is up to 436, 2-year up to 470. On the positive side as well, the Baltimore port is now up and running, although obviously at a reduced capacity after the incident with the ship and the bridge. Interesting as well, President Biden and Xi Jinping have had a phone conversation, and that's a sort of precursor to Janet Yellen's trip to China. Now, ex-President Trump never far from the headlines. He's managed to post his bail of $175 million for the appeal case against his defamation, but he's now in court facing other charges about the hush money payments. And true to script, Trump has gone on the attack on social media against the judge's family, and in particular his daughter, which now potentially leads to another gag order. And, really just doesn't seem to be sort of learning his lesson from previous cases. So will this actually hurt his numbers in the polls? Big move in oil here. Oil is back up at close to $85 a barrel. Now, potentially that has some inflation implications out there, because certainly up until recently, oil had been sort of trading sort of 75 to $80, and really wasn't pushing too many inflationary pressures. Now, in the UK, certainly potential election this year is not looking good for the ruling party, the Tories. But potentially what could sort of help save them would be any rate cuts coming through from the Bank of England. Although obviously the Bank of England is politically neutral, certainly the UK economy could do with a little bit of a boost, and certainly rate cuts are on the cards. Now, interesting in the EU, the Swedish central bank has signalled a potential rate cut in May or June of this year. Now that would be interesting. Would that be a forerunner to an ECB cut? Now in Australia, the ASX hit a record high as we went into the Easter break. And again, certainly the Australian economy seems to be pushing along at a pretty good rate. As with the US, it had a major boost from the Taylor Swift concerts. That saw quite a big jump in retail spending in March. But obviously, while that is just a one-off event, if you strip that out, retail spending was only up sort of 0.1, 0.2. Now here in New Zealand, with the New Zealand economy now in recession, a lot of talk now is about potentially the Reserve Bank cutting interest rates to try and stimulate the economy. Obviously, all eyes on the budget as well in May, just to see what the new government sort of brings to the table. Although interestingly, Treasury has actually upped its GDP numbers for 2025. They're forecasting now 2.1 from initially 1.5%. But given the fact you've got a pretty sluggish economy, is that sort of pricing in sort of interest rate cuts? We get certainly a little bit of negative news as well on the latest dairy auctions. They were down. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.